I want to go over how I read the market today. It's very simple on the way that the market was showing itself. So initially you have the opening of a new day at 6 p.m. We have a gap. We gap down as Asia is starting to accumulate lower. We tap into 830 from yesterday and use that to bounce up higher. We just fill that like instantly. This in itself, I would still use this. Kind of like this. I would still use this remaining part just because this price action is one way. I still want to see price action the other way for this area to be a balanced price range. So then after the market goes a little bit higher, it goes towards range settlement. It fades previously high, since you can see that it takes out minor buy side, then delivers out of it. It should be once it's going towards there, it should be delivering with speed. It delivers with speed, it goes lower. And then this is where it gets interesting. You're gonna have your London opening. It's very high resistance liquidity run and very choppy. But we have midnight, so we're gonna push the midnight PD arrays and the first percentage forward, and we're gonna see how the market is reacting off of them. So initially I have my it's an inverse or value gap at midnight that I pushed it forward. It got respected initially right here to go higher. Boom, it got respected right here to go lower. Then it got inversed. Then we turtle soup this, respected the first percentage after the 1230, and then we rip lower from this inverse or value gap, consolidate, turtle soup, rip lower towards previously low. We get that. Now the objective can be done around this, because the only thing I require is from a major liquidity pool anywhere from 15 to 30 points for that liquidity to be tagged and done. But obviously as we go higher, we tap into this midnight inverse or value gap, and we're respecting with the bodies. The wicks don't really matter, they do their damage. Obviously you can get positioned better at the wicks, but the bodies are really going to tell you what the story and the narrative behind the moves are. So it taps into this, rips lower, and it kind of gives you a low risk entry. From there, I was looking at this to be my my entry, but I missed it. And then I was looking at the 15-minute, and there's this inverse value gap that we tapped into the consequent encroachment. And before we close below, I was looking to use this as an entry to get lower, which would have been like somewhere around here. But obviously I didn't get my entry right here. So price kept going lower and lower and lower, and then once it passed 830, I didn't want to see a reaction off of 830, because then that would tell me that there's not enough movement from this to be like meaningful. Once we closed past it, I went to lower time frames, and I saw, was it this? No. There's this 1 minute balanced price range. Initially we used this to go higher and respected it, but as we tapped into here, having a turtle soup into the consequent encroachment of a high time frame for value gap, I was looking that we were into low resistance liquidity runs. So I was expecting this area to now be inversed, but as well be respected and the resistance to go lower. So initially it comes down, it taps the consequent encroachment here once, then it reaches towards the high of this body. It reaches to the high of the body, which makes it an immediate rebalance. Then it reaches into the VPR, or the wick of this body. So the first close is above the consequent encroachment. I want to see where the second close is. It's still above the consequent encroachment. Therefore, I'm minimizing my risk, and I don't want to see it even get traded up into it. I don't even really want to see it trade into the 50%, which it didn't. And then the next candle closes below. So now that I have all this, I was expecting price to just spool at the bottom. Since we're in a low resistance liquidity run, we should be respecting BPRs. And if we're respecting BPRs, we should be pushing away from them very quickly. So as I get in, after being some drawdown for a little bit, I use this for value gap in the lower time frame. In this exact wick right here, where we have a wickless candle at the top, it has no wick at the top, and it creates, well, it redirects the next candle towards the top, and then closes not only below, but below all this is not only an indicator that I can go break even now, but it's also an indicator that we're gonna go ballistic, like we're gonna go fast really quick on the other direction. So I can go into break even and minimize my risk, so I don't have to take an L basically. So once I saw that, I went break even. It comes back out of the range, comes back into it. I don't really want to see this, but on the higher time frame, another indicator they gave was another immediate rebalance. we rip lower. You instantly see it with the same candle and the next candle. It hits my take profit. So I had it at the 5 minute gap. Then it reacted up the 5 minute gap a little bit higher, and then it went lower, and then it ripped towards my objective of the sell side. Obviously I still have like a small level right here where we can react off of and then go higher for the day, but I really want to see this pending sell side liquidity for Monday. Also on the daily, we're consolidating, we're farming like a pendant, and then we're coming out of it, taking out this low, and then we're coming back into the range. So once it's coming out of here, I really want to see it just lower and lower and lower. My long-term target, which was June, the low was taken out, so maybe fill in like a April for value gap, or like this wick, but I don't really see it needing to go lower, because also on the weekly we could form a bullish flag, which is going to be up, then boom 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 boom, and then higher, which I think is more likely to happen for them to fill the market full of retail, because we're kind of doing it on the daily. The remaining idea for the week or the month would be this sell side, lower than Friday 17th, and possibly into some PD arrays from May or April. But I really want to see this pending sell side liquidity for Monday. This is like not what I like to see. Like for low resistance liquidity runs, you want to see one-sidedness. So once it's coming out of here, I really want to see it just lower and lower and lower. I don't know how low, honestly. My long-term target, which was June, the low was taken out, so maybe fill in like a April for value gap, or like this wick, but I don't really see it needing to go lower, because also on the weekly we could form a bullish flag, which is going to be up, then boom 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 boom, and then higher, which I think is more likely to happen for them to fill the market full of retail, because we're kind of doing it on the daily. But yeah, I mean, a lot of people, I feel like they're inducing the market for a lot of people to start trading it and then rinse everybody's pockets. But yeah, that's what I used today. And then the remaining idea for the week or the month would be this sell side, lower than Friday 17th, and possibly into some PD arrays from May or April. April can be touched, usually can be touched around fall. But yeah, that's everything. As I was looking last week, I was looking to see where we're going to reverse and try and go to all-time highs. I was looking at this specific wick. To see it to go higher. It came into this for value gap and it delivered higher, but this wick was still very useful during FOMC. You see we're trading down, and now we just come back up. During FOMC, one day of last week, I was looking at this wick and I wanted to see if there's going to be some type of reaction of the midpoint. There was at 12. So at 12, 2 hours before FOMC, we'll make a reaction off this all the way there, 650 points, and from there it comes all the way down. And then this is where it got a little bit like weird. We open, no bottom wick, and we just shoot up. So it kind of has this as a new day opening gap. This new day opening gap can remain. So this is a little bit tricky because as soon as we open, we just shut up, and we technically have like a new day opening gap, and we only had one side of the market shown through that. So I did want to see something along this side, but conditions are there for us to go higher. A lot of highs to take out, equal highs. I want to see how we close above these, and if this is going to be the next target. But yeah, so it makes a reaction of the concept of encroachment, goes up. From here, it goes all the way down around like 900 points. From there, it just starts spooling on Thursday and Friday, and then we end up closing over here for the week. Then we open and gap up. From there, we're just kind of accumulating a lot, and we create a lot of low resistance liquidity run highs. So as the day comes in, looking to go to the buy side, not only because we have a lot of momentum from only all this. So as the day comes in, looking to go to the buy side, not only because we have a lot of momentum from only all this potentially, well, leaving this as like a breakaway, not offering discount, and well, yeah. So I had the idea that we were gonna go higher in the AM. I had a level around this area. We'll say like right here. It was like 35. It was like that, somewhere around there. So I had a level right there. And then as the market opened, boom, 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 I get in right here. I get taken out right here for 50 points, and then it keeps going. Price was very heavy today, and it's very one-sided, and that's a lot of what I like to see when we were looking to just spool higher, because as you see on the higher time frame, we have low resistance liquidity runs. So within like 2 weeks, possibly not even 2, because how far are we from the weekly open to the high? 2,500. Okay, so possibly in 2 weeks we'll see this buy side, which I would really want to see this just push, not really leave any necessity to go lower. We're getting close to the end of the month. Oh no, we're fine. We have a lot of trading days to go through. Anyways, I want to see this keep going higher. As you see, we come into this daily imbalance or daily volume imbalance. We trade into it very slightly and shoot up of it, which is another signature that we are looking to keep going higher. Now, what can happen is we can have a little bit of consolidation, like time consolidation. Since we already finished what we got to do over here, and if we are certain that it's going to keep trying to push up, we can possibly expect some type of consolidation around this fair value gap. Maybe 2 or 3 days, maybe the remaining of the week, as we reach into this fair value gap. I want to see how we behave near the quantum encroachments and near the lower quadrants. And that should tell us enough if it's going to be using this fair value gap to keep pushing higher, or if it's going to consolidate around this area and then continue its move higher. Regardless, I do want to see it go higher, just because I feel like all the business is done. And this could potentially be like let off for like maybe the end of the year. All right, so during Wednesday, I was looking to read price on how FOMC was going to be working and how it's going to be playing around with levels and liquidity. And I'll try and make it as simple as I can on how I saw it. So we have one low and another low, relatively equal lows together. So that's a form of liquidity. And then we have like market structure high, this being an intermediate term high and this being a short term high. So we could potentially see this high or this high or both, as you see, I'm taking out. So very important. I want to see how this day was trading. Okay, so my expectations now. So as I was saying last week, this new day opening gap delivered sell side. I was looking for a delivery of buy side through it for this range to be balanced. We delivered through it, and then we started chopping and chopping and chopping, and now we closed above it, creating another. So now that we deliver this new day opening range gap, and we deliver buy side and sell side in a discount, I don't want to see any price come into this anymore. So from this line and lower, I would say all of this is balanced. I don't need to see any price reach into this area, and if it does, I only need to see the upper quadrant. If I see anything lower, I'm hands off, I'm wrong in the trade, and I'll just sit and watch. But as you see, we deliver sell side, buy side, we chop around it, then deliver out of it and into it again. This is all balanced, and we're delivering real quickly from it. We're targeting liquidity as the equal highs, and we're going into this daily imbalance of the fair value gap. Again, I want to see us just completely rip through this fair value gap tomorrow. Potentially, if it starts consolidating around it, I want to see where it's going to consolidate around it. But I don't want to see us go lower just because this is already balanced. And it would kind of suck for price action to create a balance range right here and then another balance range up here, which I really doubt is going to do that. So we're going to see how it ends up. PM should keep pushing us higher. We'll see how we open, and potentially this might have to leave a fair value gap in here. But yeah.